Greetings, financial enthusiasts, and welcome to Capital Investments, your trusted guide in the financial wilderness. We are committed to providing you with sound advice and strategic insights to build wealth and ensure financial stability. Whether you're a seasoned investor or just dipping your toes into the financial waters, our channel is your compass, navigating you through the ever-changing economic landscape. Our mission isn't simply about making money, it's about empowering you with the knowledge and tools to understand, adapt, and thrive regardless of the economic climate. From understanding market trends to exploring investment options, we cover it all, ensuring you're well equipped to make informed financial decisions in our ever-evolving global economy. It's crucial to be flexible and proactive, so as we embark on today's journey, remember, every challenge presents an opportunity. Today, we delve into the strategies on how to make money in a poor economy. A poor economy doesn't equate to poor personal finances. This might seem counterintuitive, but understanding the nature of a poor economy can be the key to thriving within it. A poor economy is generally characterized by low growth, high unemployment, and reduced spending. This challenging environment can have a significant impact on personal finances, making it harder to find work, earn a steady income, and maintain a comfortable lifestyle. However, it's not all doom and gloom. While a poor economy presents its fair share of challenges, it also offers unique opportunities for those who know where to look. It's a time when traditional systems are disrupted, new markets emerge, and innovative strategies can yield surprising results. It's a time when the old rules may no longer apply, and creative forward-thinking individuals can find ways to turn adversity into advantage. Now let's explore how to seize these opportunities. Strategy 1: Gold investment in the world of finance. Gold has always been a symbol of stability and security. When economies falter, the value of gold often shines the brightest, you see. Unlike currencies, gold doesn't depreciate. Its value remains relatively constant, making it a reliable investment, especially during economic downturns. But how does one invest in gold? Well, you can buy physical gold, such as bars or coins. Alternatively, you can invest in gold ETFs or exchange-traded funds, which track the price of gold without you having to store the metal physically. Investing in gold also serves as a hedge against inflation. As the cost of goods increases, so does the price of gold. Therefore, holding gold can protect your wealth from the eroding effects of inflation. So when the economy is in a downturn, remember that gold is more than just a shiny metal. It's a timeless and stable investment. Strategy 2: Peer-to-peer lending. When traditional investments seem less promising in a poor economy, it's time to think out of the box. Peer-to-peer lending, or P2P lending, is one such innovative approach. Imagine a setup where borrowers and lenders interact directly, eliminating the need for an intermediary like a bank or a financial institution. This is the core concept of peer-to-peer lending. It's a win-win scenario, with borrowers gaining access to loans they may not qualify for through traditional channels and lenders earning higher interest rates. The beauty of P2P lending is that it can thrive in a poor economy. Why? Because as banks tighten their purse strings, the demand for alternative lending platforms rises, and remember, higher demand often translates into higher returns. But as with any investment, there are risks. So it's crucial to spread your investments across various borrowers, reducing the impact if a loan goes south. Strategy 3: Freelancing. In the face of economic downturns, creative adaptation becomes the key to survival. One such adaptation is the burgeoning gig economy. It's a realm where your skills, knowledge, and creativity can act as your currency. Freelancing allows you to convert your expertise into a tangible source of income. Perhaps you're a gifted writer and adept graphic designer, or a wizard with numbers. Maybe you have a knack for teaching, or you're fluent in multiple languages. The beauty of freelancing is its vast scope, accommodating a plethora of skill sets. Platforms like Upwork, Fiverr, and Freelancer provide a marketplace where you can offer your services to a global clientele. You're not restricted by geography, office hours, or a fixed salary. The potential for growth is directly proportional to your dedication and the quality of your work. Remember, every skill holds value. It's all about marketing it correctly and finding the right audience. Strategy 4: E-commerce. The digital age has ushered in a new era of business opportunities, and at the forefront is e-commerce. This isn't just about selling products online, it's about providing a unique customer experience that transcends geographical boundaries, giving you access to a global market. Starting an online business has its perks. It requires relatively low startup costs, allows for round-the-clock business hours, and provides the opportunity to cater to a niche market that might be underserved in your local economy. Moreover, e-commerce is not bound by the state of your home economy. With the internet, you can reach out to customers in thriving economies across the globe. So even when your local economy is struggling, your business need not. Remember, success in e-commerce comes from understanding your target market, offering quality products or services, and providing excellent customer service. Strategy 5. Cost cutting in times of economic downturn. The importance of reducing personal expenses cannot be overstated. It's like trimming the fat from a piece of meat, leaving only the lean and valuable parts. When the economy is in poor shape, it's crucial to tighten your belt and cut back on non-essential expenses. This could mean anything from eating out less to downsizing your living space, to finding more cost-effective transportation methods. The money saved from these cost-cutting measures isn't just about having more in your bank account at the end of the month. It's about creating a safety net, a cushion that can help you navigate through the rough economic waters. This saved money can also be used as capital for investment opportunities that arise even in a poor economy. Remember, in the game of wealth accumulation, it's not always about how much you earn, but how much you keep. Cost cutting is the first step towards financial stability. Now for the final 5 strategies. Firstly, we have investing in real estate. Even in a poor economic climate, real estate remains a tangible asset. Buying low in a downturn can lead to significant returns when the market rebounds. Additionally, rental income can provide a steady cash flow, even when property values are not appreciating. Next, consider dividend stocks. Companies that pay dividends are often well established with a history of distributing a portion of their earnings back to shareholders. They can provide a steady income stream and the potential for capital appreciation over time. So despite the ebbs and flows of the market, dividend stocks can be a smart move. Thirdly, investing in education. This might not immediately spring to mind as an investment strategy, but in a poor economy, upskilling can lead to better job opportunities and higher income potential. Whether it's learning a new trade or obtaining an advanced degree, education can be a valuable asset. The fourth strategy is starting a side business. This can be an excellent way to diversify income sources. It could be something as simple as offering freelance services based on your skills or starting an online store. The key is to find a need in the market that you can fill. Finally, we have government bonds in times of economic uncertainty. These can be a safe haven while the returns may not be as high as other investments. They offer stability and a guaranteed return backed by the full faith and credit of the government. 5 more strategies to keep you financially strong. That concludes our discussion on making money in a poor economy. We've navigated through a range of strategies from gold investment, peer-to-peer lending, freelancing, and e-commerce to cost-cutting. We've also touched on the potential in real estate, dividend stocks, education, starting a side business, and even government bonds. While a poor economy can indeed pose challenges, it's important to remember that it also uncovers unique opportunities. It's in these challenging times that the savvy investor, the prudent saver, and the innovative entrepreneur can truly shine. It's about turning adversity into advantage, about seeing potential where others see problems. But remember, each strategy requires careful planning, due diligence, and an understanding of the risks involved. The key is to stay informed, stay proactive, and most importantly, stay resilient. Remember to subscribe to Capital Investments for more financial advice. Stay financially savvy and see you in our next video.